News when you want it with Bloomberg News Now. I'm Lisa Mateo.
And I'm Karen Moscow.
Karen, we begin with an escalation in the trade war. Just a few hours ago, China announced it was once again increasing tariffs on U.S. goods. Let's go to Hong Kong, get the very latest with Bloomberg's Jill Desis. Jill.
Good morning, Lisa and Karen. Yes, so the latest we have from China is that they will raise tariffs on all U.S. goods from 84% to 125%. That's starting April 12th. And then they say that they ultimately plan to ignore any further increases announced by Washington. The Chinese officials actually called the Trump administration's latest moves a joke. They said that given that American goods are no longer marketable in China under the current tariff rates, if the U.S. further raises tariffs on Chinese exports, they are just going to disregard those measures. So it does seem that, at least in response to that move from Donald Trump overnight to clarify actually that the tariff rates on Chinese goods flowing into the United States were actually 145% if you were to take into account earlier measures. They raised these rates this time around and then say they are done. At this point, we saw S&P 500 futures fall further after this announcement. We saw futures on the Hang Seng China Enterprises Index in Hong Kong pair gains that actually closed a little bit up earlier today, just on bets that China would introduce more stimulus to sort of help its economy. There's some speculation that that may be coming down the pike at some point. But ultimately, what we're really seeing here is this escalation in tensions between Beijing and Washington. Neither side has really blinked at this point. We'll have to see what ultimately happens in Washington in response to this. But at least from China's perspective, they're pretty much done here. In Hong Kong, this is Jill Desis, Bloomberg Radio.
All right, Jill, thank you. Well, the latest news on China increasing tariffs comes after President Trump expressed optimism a deal with Beijing will be reached.
We're resetting the table, and I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time, and I think that we'll end up working out something that's very good for both countries.
The White House confirms China now faces a 145% levy on all goods it sends to the U.S.
Well, Karen, Bloomberg News has learned top European officials are planning to visit China later this year to discuss trade with President Xi Jinping. Sources say European Commission President Ursula von der Leyen and European Council President Antonio Costa have agreed to the summit in Beijing. The possible meeting, it comes as Spanish Prime Minister Pedro Sanchez visited Beijing today, saying he sees China as a partner of the EU. And futures are lower this morning as a turbulent week to the markets comes to a close. Yesterday, stocks gave back a chunk of Wednesday's massive rally. The S&P 500 fell 3.5%.
Well, there's another worry for Wall Street this morning, Lisa, as the safe haven status of U.S. Treasuries and the dollar have come into question. We get the latest with Bloomberg's John Tucker. John, good morning.
Good morning, Karen. Normally, in periods of stress, money flows into the perceived safety of U.S. Treasuries. They rallied during the global financial crisis on 9/11, and even when America's own credit rating was cut. But now, as President Trump unleashes an all-out assault on global trade, their status as the world's safe haven is increasingly coming into question. Henry Allen at Deutsche Bank worries this could be the start of a regime change.
It's really striking that today we have seen U.S. Treasuries sell off quite severely in response to what's going on. So I think that does speak to that broader confidence crisis.
As U.S. debt sold off, yields, especially on the longer-term debt, have surged in recent days. The dollar has also plunged, and a disconcerting pattern has emerged. Investors dumping Treasuries at the same time they sold stocks and other risky assets. As former Treasury Secretary Larry Summers says, they're trading like the debt of an emerging market country. In New York, I'm John Tucker, Bloomberg Radio.
All right, thanks, John. It also remains to be seen what impact the tariff turmoil will have on corporate earnings. This morning, big banks begin to report. Let's get a preview with Bloomberg's Sonali Basak.
With J.P. Morgan kicking off big bank earnings in the middle of an escalating tariff war, investors will be watching out for how much money the big banks are making at their trading desks in the middle of historic volatility. Investors will also be keeping an eye on how much these banks are able to lend as consumers are becoming more wary about potential inflation on the heels of tariffs. I'm Sonali Basak in New York for Bloomberg Radio.
And that's news when you want it with Bloomberg News Now. I'm Lisa Mateo.
I'm Karen Moscow, and this is Bloomberg.